Hello everybody, Happy New Year! It's Yashar here, back again with another video, and in this video I'm going to quickly update you on recent changes in my stocks portfolio, including my new buys in December, together with a summary of my 2023 portfolio performance. The dollar figure of my own portfolio at the moment is close to $112,000, almost $103,000 in Wealthsimple, and $9,000 in National Bank Direct Brokerage account. And our combined grand portfolio of me and my wife worth a little bit over $134,000 today. I want to start with an overall overview of what major moves I had in my portfolio in 2023. I held 9 stocks during the year. Of course, I bought the dip and rebalanced these positions throughout the year, but I didn't sold any of these positions entirely. We held Brookfield Corporation, Alimentation Couche-Tard, EQ Bank, TD Bank, Granite REIT, Killam REIT, Aritzia, Google, and Meta platforms, which I believe all of them are great businesses. I sold 3 stocks during the year, and they were Bank of Nova Scotia, Canadian Tire, and PayPal. PayPal was an extremely small position, so that I don't even consider it a full position, but my main strategy in 2023 was to increase the quality of my portfolio, and I think I achieved the goal. Bank of Nova Scotia is a good business. You probably cannot lose money investing in Bank of Nova Scotia in the long term, but I believe EQ Bank and TD are much better businesses than Bank of Nova Scotia, especially in the beginning of the year where EQ Bank was selling for price to book of less than 1. So in the start of the year, I sold 100% of my Bank of Nova Scotia shares and bought more EQ Bank and a little bit of TD Bank with that money, which turned out to be one of my best moves in the year, as EQ Bank started a significant rally afterwards, while Bank of Nova Scotia basically continued to go down and down and down. I also sold my Canadian Tire shares entirely, as I believed Canadian Tire shares were a little bit overvalued at the time, and I invested that money into Brookfield Corporation and my REITs. I also added 5 new stocks to my portfolio during the year. I trimmed Meta when it was up over 100%, and then I started a position in Amazon and MasterCard. Later in the year, I started a position in Louis Vuitton, LVMH, and also in Monster Beverage, which I believed all of these 4 companies, Amazon, MasterCard, LVMH, and Monster, are extremely high quality businesses. They have undeniable moat in their own sector, and they have strong business fundamentals like high return on invested capital, high return on equity, and high profit margins. Finally, I started a small position in Canadian Pacific Railway, which I believe is another high quality recession resistant business in the industrial sector in Canada. Overall, I moved from lower quality businesses to top of the food chain businesses at attractive valuations, which I think is a solid strategy. My RRSP account, which consists of US stocks, was up 66% this year, beating all the major indices like S&P 500, TSX, and NASDAQ by a large margin. And my TFSA account, which consists of only Canadian stocks, was up 13% due to not so great performance of rate-sensitive Canadian stocks. My TFSA portfolio outperformed TSX, but underperformed S&P 500 in 2023. My overall portfolio, including both RRSP and TFSA, was up 29% this year, which was better than both S&P 500 and TSX. And therefore, I am happy with my portfolio performance for the year. And I believe in 2024, my TFSA portfolio will actually further outperform the indices, and it will make up for its 2023 performance. Okay. Now let's look at the overall portfolio allocation. This is a nice graphical representation of the stocks we hold in our combined portfolio of me and my wife. This is an overall concentrated portfolio with only 14 stocks. The largest holdings in this portfolio are EQ Bank at 13% weighting, Meta with 12%, Brookfield Corporation with 11%, Aritzia with 11%, Google with 10%, TD Bank with 9%, Granite REIT with 7%, MasterCard with 6%, Louis Vuitton with 6%, Amazon with 5%, Killam REIT with 4%, So these are basically these 11 stocks together form almost 94% of the value of our stocks portfolio at the moment, which shows how much I believe in these companies and how much we are concentrated in these positions. After these large 11 companies, we have 3 stocks with total weighting of almost 6%, which are Monster Beverage, Alimentation Couche-Tard, and Canadian Pacific Kansas City. Of course, the plan is to build a larger stake in these 3 stocks in 2024 so we can have a much more balanced portfolio at the end. In terms of the sector allocation, financials and tech are still our largest holdings, followed by consumer discretionary stocks. In terms of the currency allocation, most of our stocks are in Canadian dollar, almost 77,000, and $55,000 of our stocks are in US dollar. In terms of the dividend, my portfolio pays me $1,777 per year, completely tax-free right now, which is good, but my plan is to increase my dividend income to $2,500 per year by the end of 2024 through buying more shares in my dividend stocks, reinvesting the dividends, and also the dividend increases themselves. In terms of the individual account performance, let's look at my personal RRSP account first, which performed very well this year. And as I mentioned before, it was up 66%, outperforming every single major indices out there. This account consists of only US stocks. I had a few new buys in the portfolio in the last month in December, which was all about buying more shares of Monster Beverage stock. Right now, I own 45 shares of Monster, and I'm up around 6% on the position so far. It's still a small position, but I will try to consistently buy more shares of Monster in the coming months if the share price dips a little bit more. My target share count in Monster is 100 shares right now, so I only have half of my target position size in the company at the moment. I also have 26 shares of Amazon, which is up 50% so far. Amazon by far was my best performing stock in this portfolio, and I added the stock in January 2023, which was probably one of the best times to buy Amazon. I wish I could bought more shares during that time, but it is what it is. My plan with Amazon is to just hold this stock at the moment, but if I see a dip in the share price, I would like to buy more shares of Amazon. I also have 72 shares of Google here, which is up 36% so far. My plan for Google is also to just hold this stock at the moment. I don't want to buy more or sell this stock at these levels, as I believe Google is fairly valued at this point. I also have 15 shares of MasterCard, and it is up 12%, which I am happy with my weighting in this company at this point. MasterCard is an absolutely amazing business, and I think right now it is fairly valued. Outside of Wealthsimple, in National Bank Direct Brokerage RRSP, I also bought 10 more shares of Louis Vuitton, and now I own 35 shares of LVMUY as well. I have planned to buy more shares of LVMH in the coming weeks, as this luxury brand stock is undervalued in my opinion at the moment. Next, look at my personal TFSA account, which consists of Canadian stocks. The portfolio was up 13% in 2023. This is better than TSX index, but this is not really good performance for me. The main reason this portfolio did not perform well was because it consists of Canadian stocks, which are mainly rate sensitive, like REITs, banks, and Brookfield. I believe Canadian stocks that I hold in this portfolio will outperform the market in future, especially after we finally finish this recent credit cycle and we can see rate cuts. Here I pretty much just held my positions and bought just some shares with the dividends. Let's start with Alimentation Couche-Tard. I bought 2 more shares of Couche-Tard when it was close to $74 per share, and now I own 30 shares of the company, which is up almost 20%. I really like to add to this position, but unfortunately the stock barely goes down. So I'm patiently waiting for a dip to deploy more cash into Couche-Tard in 2024. Next, I have 360 shares of Aritzia. Overall, I'm down 25% of the position so far, which makes the Aritzia the worst performing stock of mine. I believe Aritzia can easily rebound to $40 range if they report good numbers in the next few quarters. I think this stock is way oversold and undervalued here. I mentioned before this company virtually has no debt, and they are still growing revenue even in a not so great macroeconomic condition. And if they can solve their inventory issues and manage their costs, I believe Aritzia can rebound quickly to $40 range again. I bought 10 more shares of Aritzia in December, and I will deploy small amounts of cash each month to nibble some shares of Aritzia here and there. Next, I have 285 shares of Brookfield Corporation. I'm up 9% on this position. Brookfield had a nice little rally in the last 2 months, and the stock went from $40 per share to now $53 per share. Brookfield is another stock that I believe was way undervalued and oversold. The business is of course sensitive to interest rates in the short term, but for a long-term investor, this was a great opportunity to buy more of this quality business at a discount. It is still undervalued here, but I personally have enough Brookfield Corporation shares in my TFSA. So for me personally, Brookfield is a hold in 2024 unless the stock goes down another 20% or more. Next is my new position in Canadian Pacific Kansas City Limited. This is a small stake at the moment, and it is up 9% so far. My plan is to buy more shares of Canadian Pacific in 2024. Next, I have 200 shares of EQ Bank, which I'm totally happy with my weighting, and I'm up a whopping 49% on this position so far. I predicted last year when the stock was in 50s that EQ Bank will reach a new 52 weeks high and potentially a new all-time high sometime in 2023, and now the stock is trading at its all-time high. I believe the company can still grow and outperform indices in the coming years, so my only plan with EQ Bank is to just hold the stock and enjoy the growing dividend of the company. Next is Granite REIT. I own 120 shares of this REIT inside my TFSA. It is down around 5%, but I'm not worried. Granite is a real estate company with extremely strong fundamentals. Even in high interest rate environment, which is really bad for REITs, Granite is still growing its adjusted funds from operation per share while buying back the cheap shares of the stock, paying down the variable rate debt, and even increasing its monthly dividend. I believe once we're starting to see the interest rate cuts, Granite can rebound to its previously all-time high share price. So I'm extremely happy with Granite REIT management team right now to their decision to deleverage the balance sheet, and I will hold all of my shares in the company at this point. I don't have any plan to buy Granite a lot in 2024, but if the share price remains the same, I may nibble some shares here and there. Next is Killam Apartment REIT, another great well-run real estate company in Canada, which is basically flat at the moment. I bought more shares of Killam in the last month, and now I own 302 shares of this company. At this level, I would probably hold my shares in Killam, but I may decide to add more shares of Killam in 2024 if the share price remains at these levels. Finally, I have 142 shares of TD Bank, which is up 1%. My plan for TD at the moment is to hold and collect the dividend over time, but I may decide to buy 8 more shares of TD in 2024 to bring my total share count to 150 shares. There you are, guys. I hope you enjoyed the video, and if you enjoyed the video, consider subscribing to the channel to see similar videos. I will come back with a few more videos about Louis Vuitton, stock analysis, and the earnings report of my Canadian company soon. But until that time, I see you guys in the next video. Farewell.